Tesla is set to grow its creation limit at its offices across the world and somehow or another work on the conveyance of its vehicles subsequent to exchanging its products over its income and profit for quite a long time. Some Tesla investigation, similar to Meet Kevin, accepts that the vehicle organization is presently getting into the scope of a worth stock. Hello folks, welcome back to All That Tesla Stock. Throughout the long term, Tesla has developed into a unique innovation trendsetter and has changed the AV space practically the same way Amazon changed the retail scene and Netflix upset diversion. The automaker, albeit not exactly as large as a few car organizations like Volkswagen, is starting to track down its direction up the stepping stool and is soon to lead the EV business as well as the car business at large. Tesla is the market chief in battery-controlled electric vehicle deals in the US, with about 70 pieces of the pie. The organization's lead Model 3 is the top-of-the-line EV model in the US, and its other vehicle models are additionally doing unquestionably well in their various business sectors. So is Tesla a worth stock? We should figure it out. However, before we do, remember to like and buy in and turn on that notice button to push state-of-the-art on everything along on with Tesla's famous YouTuber and Tesla bull meet. Kevin as of late said that Tesla is practically beginning to seem to be a worth stock despite the fact that it could not really be one as per the Tesla bull esteem stocks are supposed to encounter an expansion in profit for each offer throughout the following a half year on normal, while development stocks are supposed to have an EPS to move inside a similar time period. As per Forbes, esteem stocks will be loads of organizations that financial backers accept are undervalued in light of the exhibition of their hidden organizations. Portions of such organizations seem to exchange at a lower value comparative with their basics, for example, profits, income, or deals causing them to seem to esteem financial backers. These stocks exchange at levels that are seen to be underneath their essentials and commonly have a deal cost as financial backers see the organization as negative in the commercial center. That again, development stocks are typically impressively more unpredictable higher gamble stocks that have the potential for critical close-term potential gain. These are supplies of organizations that are producing better than expected development in deals and benefits and can possibly outflank over the long run as their organizations extend. They might seem overrated in view of their ongoing organizations, yet they are supposed to develop into and even surpass their ongoing valuations. Later on, development stocks like Amazon, Google, Facebook, and Microsoft are at present experiencing declining EPS. Tesla, then again, is supposed to see an expansion in EPS before very long. Thus, since there is an enormous EPS gain for Tesla, for what reason is the stock failing to meet expectations to such an extent? We will get to that in a moment. Yet before we do, here's an effective method for guarding your own information. This piece of the video is supported by Emanation. In the present steadily extending learning web space, your information isn't generally so particularly protected as private and touchy data can undoubtedly be compromised. Wholesale fraud is presently the quickest developing wrongdoing in America. In 2020, north of 49 million Americans were survivors of wholesale fraud, costing them a sum of $56 billion. For this reason, we're eager to collaborate with AIR, who's the supporter of this video and the authority computerized security backer of the Minnesota Timberwolves. Emanation is the main fraud and monetary extortion security supplier. It's likewise a VPN, secret key administration programming, and antivirus programming. AIR screens the web and the dull web and alarms you assuming any of your passwords and records have been penetrated. You can likewise set spending cautions to get advised of any dubious exchanges or visa tasks. You can attempt AIR free of charge for a long time today without any commitments. Begin your 14-day free preliminary at aura.com. Tesla, when you attempt atmosphere by involving the connection in the portrayal underneath, additionally realize that you're supporting this little YouTube channel and assisting us with paying for the development of these recordings. It's extremely valuable. Much thanks to you. Presently, we should return to the present video. Tesla stock is down north of 30 since August in correlation, and Nasdaq is down just 8% of a similar period. Portions of the EV producer have additionally been on a downtrend for a long while, and numerous Tesla financial backers accept that this drop is on the grounds that Elon Musk has of late sold more Tesla shares even after he said he was finished selling over the most recent year. Musk has by and large sold over $37.5 billion of Tesla offers, and this is beginning to cause what is going on, where interestingly Tesla appears to be worried about its stock cost, which is significant since the automaker some way or another necessitates to build its requests and raise more capital anyway. While this could be an extreme exchanging time, Meet Kevin actually sees the plunge as a purchasing an open door for financial backers in the drawn-out a few examination, proposed a stock buyback to recover the stock worth, and fortunately Tesla's loaded up as a firm discusses beginning a stock buyback program was somewhere in the range of 5 and 10 billion bucks. This would likely add the stock despite the fact that it is difficult to say by how much anyway. While these are legitimate variables to consider, it is vital to realize that Musk might have sold shares even without the Twitter bargain, thus the deals could not completely be the motivation behind why Tesla's stock cost is dropping in like mana request. May not be an issue, and Tesla financial backers probably won't actually consider this to be an issue. As per me, Kevin's falling lead times for Tesla vehicles are spurring dread of falling interest. Nonetheless, the consequence is that the same length as Tesla can sell each vehicle they make, which is something Musk recommends. Certain Tesla can utilize this downturn to significantly acquire a piece of the pie as different EVs and heritage automakers slack. Kevin added that this implies additional incomes for Tesla from FSD sunlight-based batteries, and furthermore, the net network impact of additional individuals driving Tesla, which will prompt more individuals purchasing Tesla vehicles. The Tesla bull additionally expressed that he has an individual value focus of $546 for Tesla by 2025. This is around 42 intensified returns every year for quite a long time. Another component that is making financial backers dread an interest issue is a drop in Tesla's conveyance overabundances. In any case, as opposed to an interest crash, it could likewise be that Tesla's vehicle supply is much more than request, which is making the overabundance drop. Regardless of whether there is an interest issue as a result of the cost of EVs, Tesla can bear to bring down costs despite everything create huge gains. The main genuine danger to Tesla's interest might be the point at which a horrendous downturn comes where individuals can't buy EVs and are cost cognizant. Consequently, one way Tesla can without a doubt build its interest is to create its minimal expense vehicle. Tesla is pursuing a cutting-edge electric vehicle stage that will be a portion of the cost of the Model 3 and Model Y. Yet on the off chance that this truly is coming, Tesla could hold on until they are near conveyance prior to making a declaration for this vehicle. Tesla is just barely beginning to get into independence. It's actually got heaps of space to develop, as per a new tweet. Kevin referred to that in Q2 Tesla made $16,669 for each vehicle in net benefit by selling just electric vehicles, while this American contender Passage made around $5,400 for every vehicle in net benefit in that equivalent period from selling just gas vehicles and, surprisingly, lost cash on EV deals. This shows that Tesla was multiple times higher than Portage concerning benefit for that quarter, in spite of the fact that Tesla might be seen as a worth stock at this moment. Esteemed stocks are not generally wise interests eventually. Tragically, numerous modest stocks are modest for good reasons, so a low price-earning relationship doesn't be guaranteed to make a stock an appealing worth money management opportunity. Organizations with slow or try and negative income development is contracting edges. High obligation levels or organizations working in business sectors that are in mainstream decline, it might frequently seem like worth stocks from the get-go yet end up being terrible worth snares eventually, since they can once in a while trap esteemed financial backers into a terrible speculation. However, generally, Tesla actually ends up being a wise venture, and the automaker has figured out how to earn the standing of a highest quality level throughout the long term, and is currently far greater than it was the point at which it began at its first sale of stock in 2010 with this market cap, crossing $1 trillion without precedent for October of last year. Tesla's market capitalization is currently more than the consolidated worth of inheritance automakers, including Toyota, Volkswagen, and Daimler, GM, and Portage. So as opposed to zeroing in on the elements that might acquire Tesla down the future, it's smarter to zero in on the center EV business, which stays solid for Tesla and for which the vehicle organization is supposed to get more grounded before long, particularly in the U.S. subsequent to recovering admittance to the government EV tax break. Very much like me, Kevin and a few Tesla bulls have kept up with their cost focuses for Tesla stock. Morgan Stanley examination Adam Jones as of late repeated its purchase rating for Tesla with an objective cost of $330, which addresses a critical potential gain over Tesla's ongoing stock cost even on account of serious downturn. Tesla is strategically situated to scale through, so financial backers might need to zero in on Tesla's basics and not give an excess of consideration to the interruptions. On the off chance that you figure Tesla can be viewed as a worth stock, let us in on down underneath. And to find out about what Tesla's been doing over the most recent couple of days, feel free to tap on this next video on your screen. See you there.